following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Let me just get this ESH17. Okay, we're all ready. My pleasure to be here Monday through Friday. And just had a lovely session with Tommy Jr. Tom is away, so I sat in for Tom. And we had a lot of fun. We went all over the show. We went to real estate. We went to Somerville. We went just everywhere. Right, let's look at the market. The Dow's down 470. The S&P's down 475. Yep, 475 in the E-mini. This is what I'm really looking at. Slightly lower highs, slightly lower lows to start off with. Maybe an acceleration later in the week or early next week. I think we're going to make a peak D in the weekly chart of the E-mini. If you look at the 120 chart right here, it made that arch formation that I always talk about. It retested the left side low of 2367. It went a tad under. It went to 236625. Let me put that in as this is D. This is now leg D. And it could be a bounce, and I'll do that. I'll do that right now. So the 10-minute E-mini had a single leg A up to the upside. I had a technique that I used called Chapman Wave Trend Gauge, which is flashing a sign suggesting strongly that we could see within 2 days of yesterday, because it was an intraday signal, a rally of 9 to 11 points that could help the S&P and the Dow cash situation to rally. But after that finishes, the rule is that you get a fade, you get a pullback. Well, here it is. We come down early in the morning, go all the way down to that level of 2366.25 in the E-mini, rally sharply, single leg A up. Now we're going to see, does this give back? It's what I call the Eiffel Tower syndrome, or single leg A. It looks just exactly what it is. Here's your A, and it goes straight up. So let's format it. Let's make it red, because red is the color of the up and down configuration. And there it is. So it goes straight up and straight down. We'll see. If the E-mini breaks 2368 support, then obviously it could very well test the 2366 level. And that's really what I'm thinking here. I went through this with Tommy saying, if you look at the top issues in the Investors Business Daily IBD 50, if you look at even the 10 and 15 top ones, they're all making these tops, refusing maybe to go down just yet, but they're struggling. And that suggests to me that you're looking at some kind of a distribution, even if it's short term. So I'm being quite careful here. Now, this is the issue. Within the Chapman Wave methodology, another technique that I developed over the years is what I call, it started off based on Elliott Wave 5. It now has, the only concept now is that it goes to a 5. Otherwise, almost everything else about it is different. Look, you've got your Wave 1, you've got your Wave 2. Wave 3 should be a minimum of Wave 1. It's not a rule that I have. And you go to a 4, now you go to a 5. Right here on this 5, a whole bunch of things could happen. Why? If you look at the same 120-minute Dow chart on the right, the MACD, the moving average convergence divergence, is look at the distance in the vertical bars, that's the red bars, which is a visual demonstration of the internal machination of the 9-period differential, which is the green line, the faster moving average, and the 26-period, the slower moving average, the red one. And look at the stochastic, China flattened out at 18%, under 20, not a good sign. So this says rallies should fail, and you should be making these arch formations in the Chapman wave. It's the pattern I call the lowercase h pattern. All right. So and yesterday when I was talking about, I'm not sure if I did it. I think I did it during the show that I did with Tommy, the Money Masters. I'll try to find it. No, I'll have to do it during the break. So what we're looking at here is that there is pressure not to break down at this point, but there's pressure not to break out. That means we're in a containment area. And if you're looking at the Dow, let's just go back to the Dow. look at the Dow on the daily chart, INDU. Look at the way the, I have to place it over there, IND. Look at the way the gap is slowly being filled with these little doji candles. And the gap is between, the high was 21,169 on the 1st of March, 21,169. The gap from the previous session of the 28th of February is at 20.841 was the high, and the March 1st gap up 20,957. We've gone into it, but we are testing the 9-period moving average, haven't broken down. MACD hasn't turned negative yet. I think it will. And the stochastic is moving down at 80%. So let me run the numbers now. So in other words, lower highs, lower lows, that's what I'm thinking. S&P, what we're looking at in the S&P is it's down 3.44, not a big deal, at 2371 on the 9-period moving average. It has, in fact, 2367.79, 2367.09. It has filled the gap. And that's what I was anticipating. I suspect that we will make, unless there's a big spike on Wednesday because everybody's thrilled with what the Fed's doing, I think it's going to be tough. I think the Fed's put themselves into a situation that says the things that we watch are suggesting that there should be a market pullback. That there should be a rate hike. Oh, that was a mistake, Freudian slip. A rate hike. That's what I'm thinking. So let's do this. Let's go to QQQ series, holding nicely. But as I say, it's a holding pattern. If you look at the Investors Business Daily, which has a number of these stocks in them, it's suggesting that they're struggling to push upward. And therefore, if I use Dave White's usual the name of his newsletter, what's it? Most likely, I forgot it. I see it all the time. He talks about it, and now I just completely forgot about it, what the name is. I should have remembered that. I shouldn't have said anything until I looked at the name of the newsletter. But anyway, it's the I'm going to find it. I refuse to let this, I'm not going to let this, here we go. I saw it. I'll go to the front page of TFNN, and it's called Path of Least Resistance. Sorry, Dave, I do know that. I don't know why it slipped my mind. Path of Least Resistance. Seems to me that it could be to the downside. All right, let's keep going. We want to look at the IWM. IWM right now is also down. It's down 18 cents at 137.51. If the IWM takes out the 136 support, that's a problem, I think, and for the general market. Gold. Let's look at gold. Gold right now is down only 5.7. It was down more. It's at 12.19. Here's the 2-minute chart of gold. We had a caller, and we were looking at it, and he wanted 120. I think he's going to get it. There it went to a peak D, pulls back, and this is now an E/B right there at 120.80. I think that was his target. Hopefully, he'll know exactly what to do. Congratulations, Mike. Now, let's look at silver. Silver, there we go. Silver is down. It's below the 200-period moving average intraday, but it's holding at 17.615. I think it has a little more to go, and that's going to be the big test. Big test is this candle right here of the third at 17.328. All right, we'll be back. We want to be looking at the bonds. We want to be looking at, maybe we'll do a little relationship of bonds and yields. I'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me go to some of the questions because it relates to the yields. A good question, in the den said, do you ever look at the 5-year or 2-year yields for indicators? Am I correct? Is it TU? Let me just double check here. So there's dollar TU. I think I'm correct. Yep, 2-year. Okay. Yes, I do. Oh, this used to be notated. I haven't got it notated for any reason now. Looks like it wants to go down, doesn't it? Interesting. Oh, well, we'll get to that. So this is what I've got here. This is my triple yield that I send out to subscribers every week or so. And I show what we're looking at the 30-year T-bond yield. This is the TYX. That's in white. The brown yellow one is TNX. That's the 10-year T. So it's the T-bond 30-year, T-note 10-year. And the cyan color is the 5-year T-note yields at FVX. So TYX, TNX, and FVX. So what we're looking at is look how close the 30-year is getting to breaking out of its trendline resistance. Look how close the 10-year is to breaking its resistance. Same thing for the 5-year. But we've seen this pattern, this right side cluster formation before, and it's broken down. That was when I was talking about the Japanization of our bond yields. I haven't got anything yet that says if the Fed really looked at some of the figures like the defaults in the auto industry, etc., things are not quite as rosy as could be painted. But for what the Fed is looking at, they might just say, you know what, we need to just raise rates, and that's it. Now, here's the other thing. 31.97 was the high the week of the 16th of December. So that's 3.197%. If that gets taken out, if we go to 3.2 by next week, that starts a new leg B. I can't really legitimately call that an F. I suppose I could. We've done that before over there. Back in, I think it was in 2013, 14. Yeah, December of 2013 and going to January of 2014 up to the 39.32 area, 39.74. But you know what? I think if we break out one more time, the rates are going to go higher. So the question is, do I use them as indicators? All I can say is that initially, if yields start to break above into that 3.2% area for the 30-year, and then the most important thing, of course, is the 10-year. And if the 10-year breaks above, 10 years, 24.78, no, 26.21. So if the 10-year goes to the 27s, 2.7%, I think we're looking at something very different here. It's the first time that there's been a significant break in a very generous trend line. Let's put it that way. But the most important thing is that when we did break back in, that's the week of November the 11th after the election, when the yields broke to the upside, that was saying that was the first really big break in yields to the upside of trendline support. Sorry, trendline resistance. And it never became trendline support. We haven't even come back close. So yes, so the answer is I use it as a market indicator only in that the shock of going there, I think, is going to hurt the market. I know people don't think that, but that's my thinking. Okay, here's the other thing that I'm looking at. I'm still calling this a leg F in wood, which is the iShares Global Timber and Forestry ETF. And I'm still calling it leg F. It's an F/C, F/B in the wood, and F/C in the HGX, the Philadelphia Housing Sector Index. Although the way this has moved up, maybe I should lean towards a C, but I think a peak F. And I can just tell you that if both of these drop quite sharply over the next 2 weeks without making new recovery highs, that's going to be a sign to say, hey, be careful. Now look at, this is the South African, Dow Jones South African Stock Index. You see the rhythm of these cycles? And what's happening is that this is the first time that there's been such a big move to the upside and then a consolidation. We've usually had a pretty big move, but nothing like this from the peak D top that was made. So I'm watching this. I'm just trying to put the whole thing together. So I've got really great questions I want to get to. So the first question is, the yield on the 2-year Treasury, 2-year U.S. Treasury note continuous contract looks like it wants to go low. Oh, bonds. This is the bond. This is the 2-year U.S. Treasury note. It's not the yield. The yield must be going higher, and this looks like it's going long. This is at symbol TU, and it looks like it wants to break at 107 and 31/30 seconds. It looks like it wants to break below the low of last week, which was 107 and 30. That's just too close. I don't care about that. I'm just saying if it breaks 107.20 in the next week and a half, yields are going to go much higher. Just make it as simple as that. TLT, same thing. TLT, if it breaks the 118 support, goes to the 117s and cannot rally back into the 118s, this major uptrend line, that's the reason why I'm saying my thesis of Japanization of bond yields has worked right up until recently. Now I'm not sure, but I'm not going to say anything until it breaks on a monthly basis. Key support, and that key support is this trend line here. So at 140, the close below 114 anytime this year says Japanization of our bond yields is kaput. We're going to go for higher rates. Make it simple. Okay. Now, questions. Let's go right from the top. So Paul sends one and says, just an added note about the ETF, which you addressed yesterday. My concern is not the index funds, but all the specialized ETFs. As most of these are relatively new, I fear these will lead to a crash when everyone wants their dollars back all at once. All to add to that, millions of baby boomers retired or close to retiring, they will panic, cashing out all at once. Paul, you've hit the nail on the head. This is part of my thesis of the coda sector. It's coda phase. And I agree with you. So all I can say is I don't think we're ready for it now. I think we're ready we could even be ready for the first double-digit decline. But that's not the top. That to me, the public is just not in for the kind of major top that I think we're going to have when we get it. So I hope that addresses your question. You're absolutely correct. It's just the timing, I think, is different. So, okay, now let's go to more questions for today. Let's go to, Jim, thank goodness you gave me the other email because I did send you a note. Immediately you sent me the question yesterday. Okay, GT wants to know about TNX. We just did that. How high it goes, 2.7. Okay, let me just do it, a TNX by itself, TNX.X. This is leg B. This is leg A. Leg B starts above 25.20 in the daily. But this is the pattern. You know that if I look at this pattern, the minute I look at it, you know what I do? I draw the H pattern, and I say, aha, in my Chapman Wave methodology, holding well, that means you could now get a cup formation, and a cup formation just like the dollar did. You remember the dollar in the monthly chart, DXY? Look, patterns are patterns. Remember that pattern? There it made a double U formation before it broke out. So let's go back to the TNX. TNX.X. Look at that. Look at nothing because I hit the wrong key. Of course, I'm the greatest typist. There we go. And look, we've got a pattern that's a cluster pattern suggesting that it wants to test the top. And the top is 26.21. I'm very concerned. I think the TNX is going to push higher unless the Fed just backs out and says, you know what, we're a little nervous. We're not going to do anything now. I'll be back. Basil Chapman, Tiger Technicians Hour. We've still got a lot to go. Many more questions.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So we've got a chart that I'm looking at right now. It's the GDX. Danny in the Den asked about GDX. And the GDX trading at 21.66 up 2 cents has just made a series of every single day, it seems like it goes. So for 1, 2, 6, 7, 8. For 8 sessions, it makes lower lows, and actually lower highs as well. It's ready for a little bit of a bounce, but I'm afraid that the stochastic at 11% and flat is suggesting that there isn't all that much strength there. There is very little there. So I think it needs to test this low right here, this candle, the little gap, So 20.45, it's not a big deal. It's just another 1.5 below. That's what would be the left side, right side, and it should do that match by the 9th of March. But I got a feeling that we might get a little bump to the upside in the meantime, and they could extend it out. I just took it to this particular doji candle right there. Unless I can see it as an exact midpoint, I use aesthetics, so where you couldn't do science. You have to use artistic considerations, and that's what I'm doing. So yes, I think that there's a little further to go. I would not be surprised if gold is very close to trying to find some kind of a bounce support. And if there is a bounce, I suspect that bounce could last actually 5 to 7 sessions as the dollar. And this is going to be very interesting. What happens to the dollar? By tomorrow afternoon, we could find that at peak D in the daily in the dollar actually just doesn't break to the upside, but it doesn't break down. It just, I drew this rectangle here after the peak C1, C2, going to a potential D. I'm going to raise that and extend it. And I'm saying there could be a range for the dollar between that and no new high, but it just stops at about 102, but it doesn't break down below 100 and let's call it 101 to 100.90. Let's see what happens, because I can tell you this, if the dollar takes out its high of 102.26, and it's really working towards that venture in the weekly chart. It's trying to. It has not broken down in an arch formation. It's more like a cup, and because of it, the strength is saying price movement is important because the technicals are not that great in the weekly chart, and that's the reason why I'm saying it could pop up, but I think it's going to keep coming. I don't think at this point the dollar's going to break out unless it does it tomorrow afternoon, Thursday. I think the dollar could be stuck. Make it real clear. A breakout above 102, a close above 102.26 is really important for the dollar. That says, yes, we are going to go retest the highs that were made back in the week of January the 6th at 103.82. And then the gold, and then gold will pull back a little further, but it's getting close to candles where there has been some support. And that's like 1208 on gold, and it's at 1218 right now. So I think that gold is just ready for a little bit of a bounce. But if I'm looking at this thematically, the tide says to me gold is going to make lower lows and lower highs, and the dollar is going to make higher highs and higher lows over the next 2-week period. That's kind of my thinking at this point. Fed could change that, but that's what I'm thinking. Okay, next question is, so that's GT, and I've done all that. XRT. Now the XRT, and it's not one of my favorite vehicles. It has too few stocks. It is the Spider S&P Retail, and it's trading down at 41.98. It's a Spider S&P Retail. It has Groupon, GPS, it's Gap, outerwear, I think it's called TLRF, whatever that is. Oh, Francesco, I happened to be there the other day because we were looking around in Somerville, and there was this place, and of course my wife couldn't resist just having a look, and we went to Francesca's, and I've always been intrigued with Francesca's because it had an incredible move. Let me just do this right here. Let me show you. At one point, and I hadn't really heard of it, and I thought, what is Francesca's? And I did see one. It had this incredible move when it came out after it was an IPO back in December of 2011. It hits 1522. And then it runs up and more than doubles, 37. And then I thought, okay, keep your eye. And every time I kept my eye on it, and the sort of kind of nice, there were people there and everything, it kept going down, and it still keeps going down. It's the same thing now. I'm looking at the store, a lot of stuff people were really buying. It doesn't seem to make a difference, Francesca. I'm sorry. That's just the way it is. A, B, C, D, E makes a peak F in the weekly. Yep, Francesca's in it. So here's my question. XRT, I would prefer, if you're looking at something as an indicator, that's one thing. It made a peak DE, made a peak E in the daily. It's trading at 41.99, down 35 cents. It looks horrible. It's about to retest the 200-period moving average. I don't like it at all. It's a real problem. Now, Kevin had mentioned earlier on when I was with Tommy about folks looking at Macy's. Macy's was the leader. I don't think it's the leader anymore. I think Amazon, the way Amazon works, it's just doing damage to all of these retail companies. And that's really the issue. I don't know. I don't want to do it now. Maybe someone can remind me. Maybe tomorrow. I talk about leapfrogging, and the leapfrog is really the issue. The leapfrog means that you've not only have you configured a particular medium, but you've developed a prototype that just comes out of the blue and knocks the norm way off. And now the new norm is something that everyone has to deal with, whether it's Airbnb, whether it's Uber, whether it's Amazon, and that's really what's going on. Okay, XOTD, SIG, yeah, I did that. Okay, let's go to Sarah wants to know about the transportation index. I haven't looked at it today. EYT. Whoa, down. Now, here's another reason why I'm not very sanguine right now. I think that there's a lot of interference. There's noise in the market. You're not hearing it yet on the media, business medium, but I think the noise is saying, be careful here. You don't have to get carried away on the long side. Maybe you don't even have to get carried away on the short side. Just have some protection. That's all. It's really important. Okay. So this is leg C in the monthly chart of IYT. That's great. The weekly is making a peak D with a format that says you should come back into the rectangle. It's at 169.06, down 83. Should go into the 165, maybe even test the 162 area. But that's what I'm thinking, upside limited just for now. So hope that helps you. And now here's a really great question. MetLife I haven't looked at for a while. It's kind of sideways. Okay, it's in leg E. Let me just show you in the chart wave there, gaps down, starts a brand new move to the upside. I actually like stocks that gap down and then start to fill the gap and then break the gap on the upside. That to me is an extremely bullish scenario. This hasn't, it did it. It's not extremely bullish because the weekly chart is still very weak. So I'm watching MetLife. It's in the insurance area. I can't remember specifically which insurance. I don't think it's healthcare insurance. I think it's life insurance. I used to have it typed in. I don't know. I think MetLife is life insurance. Okay. So, yes, it's acting okay, but okay is not good enough right now. I would not be going along at this moment. I need more proof of upside potential. Next question is CSX. CSX. Is there something? No calls? No. CSX, oh, it's just spectacular. Is this Buffett's? I think Buffett owns CSX. This is leg C in the monthly. Fantastic. This is leg E in the weekly. Still very strong, but getting a little toppy. And now we might be looking at, within a day or two, A, B, C, D, E. We might be looking at CSX pulling back a little bit from 49.46 down to the 46s over the next week. Oh, got to watch it closely. Okay, we'll be back. Basil Chapman, Dowside 32. We'll be right back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So let me just go back to CSX. People ask me, so within the Chapman wave, what are the difficulties? The difficulties, you see this arrow down at the bottom after this peak D? See the way MACD and stochastic just ripped apart. They went way down. If I was just looking at that and you cover this up, and sometimes I do that, I put a piece of paper up and I cover the symbol, so I just have no clue what's going on. I even cover the chart. I say, where would this be? Because the stochastic held quite well. I'd say, you know what? If we were looking at it over here, we're probably down in the 44s, holding nicely after going lower. Well, look, it's just steadily moved up. It walked the 9-period exponential moving average. That's number one. Number two is, this is where I almost always put in a plus sign, like that, to suggest that there could be some kind of a low. So that would be trough A. And then I'd put in a plus sign underneath it. And invariably, if you know my work, I immediately grab my tool right there and I say cup formation. And that cup formation pulls back, and lo and behold, it goes even higher. So as long as it's walking the 9-period moving average, at this point at C, I'd probably say, hey, you know what, I think it's going to D. I'm going to change that plus. I'm going to go for an up arrow. Just because if it goes to a D, you have to have an up arrow somewhere. So that's like backwards, just to get it right, because visually I want to know that I've been doing the right thing. But it doesn't mean to say I traded it correctly, or it doesn't mean to say that I notated it correctly. But if I traded correctly, that's even more important. And it held the 9-period moving average. So I do not have CSX, but now I'm thinking in E, with the MACD still weak and the stochastic still at 84%, there could be just a minor pullback. And we might look at it in the same way as we looked at, you remember this gold chart, the 2-minute chart? Look at the way it went from a D to a gray A to a new recovery high to an E right here, right to the target area that I believe Mike was looking for. And then it pulled back. And now it's pulling back quite deeper. So the reason why I wanted to show it is that this was, I could have put in, I would have put a plus sign there, but that H pattern succeeded. Immediately I've got to say, good, now I've got myself a cup formation, and that can go to the upside. Hope that clears up a little bit. That's one of the difficulties. It's not a difficulty in trading, it's just difficulty in notation. And the other is this D really an E because of that extension? It's the first higher high. Well, no, it's perfect. You want a C going to a D, and that's an E. Is this a brand new A? Absolutely. No way I can think of it as a brand new buy mode. This is an E as far as I'm concerned. All right. So that's that. Now, the next thing I want to do is I had a question about, where would the question go? Oh, Tim in Denver. Tim, I've got you right in time. How are you?
Good, Basil. How are you doing today?
I'm well, thank you. You'd like to look at, the IBB.
Yeah, I like your take on the IBB. I think you got a pretty good take on it, so I'm just figuring what
So,
Pretty
okay,
good down, getting some volume today.
this is exactly what you wanted to see. You wanted to see the second arch in the M formation of the MACD come back down, go towards heading to the 26 period exponential moving average, that red line of the MACD, and then take it out. Hasn't taken it out. You want to see the stochastic fail with a lower high when it went to a higher high in price. It's exactly what it did. You want to see the on-balance volume make a lower a turnaround, and it's done that. But the stochastic's at 82%. So I'm looking at this, and I'm saying to myself, and I did the work on it, I was going to, today, I almost said, hey, let's do some shorting, but we've already got positions. I needed today to think things through clearly, but I like thanks for bringing it up. I actually forgot to look at the IBB this morning, and it's gapped down. This says to me that I'm pretty sure I'm going to be putting a down arrow to say this daily chart of the IBB has started a sell signal, but I need to know that the stochastic's below 80% before I'm convinced that I must put in a down arrow. So I might stay with the plus sign. I might even make that plus sign red to say, hey, warning, there's going to be a down arrow if there's another close under 296. Let's call it 296.30. The 9-period moving average is 296.98. Now, are you looking to short this via shorting or the 200% short position, or how are you going to do, or options? What are you going to do?
Well, I actually own it now, and I was thinking about covering this morning when it was on its high. I got the 300 short, but I'm still holding on to it. It's making me a little nervous because this has been kind of strong. The IBD's been kind of strong, so I haven't covered yet, but I like the volume today, so I might try to hang on to it here.
So here's my recommendation. Because of the 120-minute chart at peak D, it's doing everything that I would like to have seen. I was actually silly. I would not have got it, because I would have said it closed yesterday at 299.83. I'm pretty sure I would have said at 300.50. That's where we want to short. So the fact that you're already in it, I'm just going to say to you, I like what I'm seeing at this particular point for the short side of the IBB, the Nasdaq Biotech ETF. Now, if you are a little bit nervous because it could gap up, I'm going to say to you, could you make your position a little smaller, give yourself some room, and maybe
certainly. Oh yeah, certainly.
If I don't, let me put it this way: the positions we have should make us feel comfortable, but not nervous. Sometimes we can be nervous. For instance, I've been very nervous about the DOD, which we are long, and it's had a spectacular move, only because it's going to make it so hard to get back in, because when this thing comes back down, it could come back down really sharply. So now we're whittling away, we still got a core position, but that makes me nervous, because it's only nervous in my thinking as to what to do next. It's a nice problem to have, but at the same time, it's taking a lot of effort thinking it through. If you're nervous about losing money, we're talking about perhaps losing profit, that's two different things. Losing money is something else. So if you are nervous, why don't you put a stop at 297.85 was the high. I'm going to make it 297.20, just above the 9-period moving average for one more day. If you think you can live with that, I've got a feeling you're going to be pleasantly surprised, because the way the IBB is acting right now with those two candles, insecure candles, goes to the peak D right at 303.74, has a strong day after that, but lower high. And then yesterday still tries to come back with a lower low, and today gaps out. Everything about it is saying to me there's a really good chance that at least on the short term, there could be a test of this very strong candle of the 27th with a low of 289.38. If it in the next 3 days, if we can take that level out, that's actually far away. But if you can take it out by Friday or so, I think that the IBB could have quite a pullback in time and some price. Whether it's going to collapse, I'm not sure yet, but I think that this is the move that says to me, your entry on the short side is a good entry, but if you want to keep the stop fairly tight, I don't think there's any harm in keeping it tight. So just just above 290. What did I say? It was 297.20. What was the high?
Right.
No,
Right.
I'd make
good
it.
volume going down. Good volume today.
Yeah,
going down, too.
everything about it. I think you're in the right position. I hope that
Thanks,
helps
Basil.
you.
Appreciate it. Yep.
Okay,
Thanks.
thanks for calling, Tim. Always appreciate it. Tim in Denver, we looked at IBB. Dow's down 22, S&P's down 5. I'll be right back. We'll wrap up with this final 5-hour in the next 5-minute session. Be right back. S&P's down 5.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Don't forget, Kevin comes up with the Think or Swim options. Boy, what a wealth of information it is. Then, of course, you've got Steve Rhodes, and when it comes to the looking at the data, the history of the data, Steve, and no one outdoes Steve. He has such a, he's a novice. You got to think of Steve. He just came to this late, and most of us here have been in this business a long time. And what Steve's garnered over the years, not that many years, is fabulous. Just really a wealth of techniques. And then, of course, you got Dave White. He's our guru, our technical guru. He uses volume in a very special way. We've got Tom O'Brien will be back, I think, on Thursday. So this afternoon, we've got, I think, Larry sitting in. Maybe Steve as well. I'm not sure. So we've got a lot going on. And hey, what is today? Tuesday. And then you've got the last hour with Andy Hecht. Very informative. Wealth of knowledge there. I've been in the business a long time, commodities. Okay, so now we're looking at this, and we're looking at this little, here's the 10-minute chart, which I didn't talk about. There's a pattern that we looked at, which I call the Eiffel Tower, straight up, straight down, called the Eiffel Tower formation. And what happens is, it doesn't always go back to below the low that was made, but it goes real close, which this did. Now it could bounce, and what I've done is I've got 2 channel lines, and it says that there could be a rally if it takes out the resistance at 2371. That says, you know what, you can go to the next peak, which is at 2370, 275. But my thinking is that right from now until maybe even this time tomorrow, we might be in a holding pattern. As the market says, let's see what the Fed is going to talk about. And I don't know, Fed seems to me like they want to talk about higher interest rates. It's just when, right? Okay, so let's get that out of the way. And let me just cover this one more time. There's a question I had about Apple. So, the question is, should we short Apple? I don't want to short something that I'm seeing technical weakness, but it's mild weakness. I'm seeing the unbalanced volume at highs, and the only way this thing can go now is going to be towards the downside. But I'd rather be looking at Apple as something that I want to be buying. So if you have a mentality that says, I'm able to switch from short to long very quickly, that's fine. If you want to short, given the fact that we're right in we're on the cusp of the potential to have news come out that shoots the volatility index up into the 13s or higher, and certainly can affect the market negatively, because I think rates more than other words can do it. Just at least for the short term, and then the market say, hey, rates, this is good. The markets, everybody's happy because you now can raise rates. Things are being sold, we're increasing jobs, blah, blah, blah. That's going to be a positive. But short term, maybe we've got a problem. If you want to short it, just put a stop 1 penny above the high of 140.28. I would not be shorting it. Apple is one that I would like to think of as buying, just as I would be looking at, say, maybe a Facebook. Facebook's had a very strong move up. It's gone. The new move is A, B, C, D, E. This is an A, B, C, D, E. This is a leg E. So everything is on the cusp to say tomorrow we could start a change of trend with greater seriousness. If Apple pulls back 2 points within 3 days, Facebook trading at 137, down 18 cents, pulls back to the 130, under 135 by Friday or Monday of next week, we could start to see a change in the trend, at least short term. So that's the only way I would do it. Folks, have a wonderful day, and be back tomorrow. I don't remember if I got an interview this afternoon or not, but anyway, have a wonderful day, and I will see you tomorrow at the same time. Check out my opening call. Hopefully it's beneficial to you financially, and there are a lot of things that are discussed there that are not normally discussed in newsletters. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.